Singapore is renowned for its pro-business environment, economic stability, and a tax system that attracts global investors, high-net-worth individuals, and expatriates. This blog post explores why Singapore is considered a tax haven and outlines the specific tax benefits of moving to this vibrant city-state. Singapore's personal income tax system is straightforward, with one of the lowest maximum rates in the world. The progressive tax rates range from 0% to 24% for residents, with non-residents typically taxed at a flat rate of 15% or higher, depending on the income source. No capital gains tax. Singapore does not tax capital gains, making it an attractive destination for investors, entrepreneurs, and those with significant investment portfolios. No estate duty. Unlike many countries, Singapore abolished estate duty in 2008, allowing individuals to pass on wealth to heirs without additional taxation. Tax reliefs and deductions. Residents can benefit from various reliefs, such as the Earned Income Relief, Parent Relief, and Course Fees Relief. Singapore's corporate tax regime is tailored to foster business growth and attract foreign investments. Flat corporate tax rate. The corporate tax rate is capped at 17%, significantly lower than global averages. Partial tax exemption for startups. Startups benefit from tax exemptions on their first SGD 200,000 of chargeable income for the first 3 years of operation. This is particularly attractive for entrepreneurs and small businesses. One-tier tax system. Dividends paid to shareholders are not taxed, as corporate income is only taxed once. Industry-specific incentives. Singapore offers various schemes for sectors like manufacturing, finance, and R&D, such as the Pioneer Certificate Incentive, PCI, and Development and Expansion Incentive, DEI. Singapore has an extensive network of over 90 double taxation agreements, DTAs, with countries worldwide. These agreements prevent double taxation on income, reduce withholding tax rates, and provide certainty on tax treatment for cross-border transactions. Withholding tax relief. Reduced rates for interest, royalties, and dividends ensure that businesses and individuals retain more of their income. Credit system. Residents can claim tax credits for taxes paid in foreign jurisdictions under the DTAs. Singapore has become a hub for wealth management and family offices due to its attractive tax policies. Enhanced Tier Fund Scheme 13X. Qualifying funds managed by family offices enjoy tax exemptions on certain income streams. Global Investor Program, GIP. High net worth individuals can gain permanent residency while benefiting from favorable tax policies. No wealth tax. Singapore does not impose wealth taxes, making it an appealing location for affluent individuals. Singapore's tax residency rules are transparent, providing flexibility for expatriates and investors. Resident or non-resident taxpayer. Residency is based on physical presence, 183 days or more, allowing individuals to plan their tax position strategically. Area Representative Scheme. Expats working abroad for more than 6 months in a year are taxed only on their Singapore-sourced income, providing significant tax savings. Singapore places a strong emphasis on fostering innovation and research, offering significant tax incentives to companies and individuals involved in these areas. Research and development, R&D. Tax deductions. Businesses can claim up to 250% tax deductions on qualifying R&D expenses conducted in Singapore. Productivity and Innovation Credit, PIIC scheme. This scheme allows businesses to benefit from enhanced tax deductions or cash payouts for activities like automation, training, and intellectual property, IP registration. Intellectual property, IP, development, incentives. Companies involved in IP development and management can benefit from reduced tax rates under the Intellectual Property Development Incentive, IDI. Singapore's tax policies complement its streamlined visa system, making it easy for professionals and entrepreneurs to relocate and work in the country. Employment Pass tax benefits. Professionals on an Employment Pass, EP, are taxed as residents if they spend more than 183 days in a calendar year in Singapore, granting access to the progressive tax structure and various reliefs. Non-resident tax considerations. For short-term expatriates, income derived in Singapore is taxed at a flat 15% or the progressive resident rates, whichever is higher, ensuring fair taxation. Tax-free relocation perks. Benefits like relocation allowances, airfare, and temporary housing provided by employers are often exempt from tax, enhancing Singapore's appeal for expatriates. Singapore is renowned for its straightforward and efficient tax administration. Ensuring compliance is hassle-free for individuals and businesses. E-filing and automation. The Inland Revenue Authority of Singapore, IRAS, offers an easy-to-navigate e-filing system, simplifying tax submission and payments. Advance rulings and tax certainty. Taxpayers can request advance rulings from IRAS to clarify tax treatments, providing certainty and reducing disputes. Prompt refunds and minimal audit risks. Singapore's efficient processes ensure timely tax refunds and minimal bureaucratic hurdles, making the tax system highly business and individual-friendly. Singapore's robust, transparent, and competitive tax framework cements its position as a global financial and business hub. Whether you're an entrepreneur, high-net-worth individual, or expatriate, the city-state offers a wealth of opportunities for tax optimization and financial growth. Moving to Singapore isn't just a relocation, it's a strategic decision that can provide long-term economic advantages.